Is Australia's property market on the cusp of a boom? Hello, I'm Dave Mitchell. This is a trending story on Kalkine TV. Homebuyers are snapping up properties across the Australian market thanks to the new record low interest rates, relaxed lending conditions and the government's wage subsidy programs, which together have fueled demand in a matter of months. According to the Australian Bureau of Statistics, residential property prices edged up by 3% in December 2020, showing the most substantial growth since December 2019. During the past quarter, a rise in residential property prices was recorded across all capital cities. Commonwealth Bank of Australia believes that the country's housing market is on the cusp of a boom, with housing values set to jump in double digits over the coming 2 years. The recent homebuyers rush is capitulated by mortgage lending, which was up by more than 20% in December 2020 over the previous corresponding period. As indicated by the Australian Prudential Regulation Authority, despite the government's first home buyers scheme, young Australians are facing a tough competition amid the soaring home prices. Australian house prices are rising at the fastest pace in over 3 decades. Currently, prices in Sydney, Melbourne, Canberra, Hobart and Brisbane are all at record highs. According to the ABS, rising property prices together with stock market recovery has boosted total household wealth, which rose 4.3% or 50.1 billion Australian dollars in the December 2020 quarter, exhibiting the strongest quarterly growth since December 2009. The rising property prices have been the key driver for the quarterly growth in household wealth, with residential assets contributing 2.2%, while superannuation balances and directly held shares at 1.4 and 0.5%. Head of Finance and Wealth at the ABS, Kalkine, indicated that residential assets, as witnessed across both owner-occupier at 1.9% and investor housing at 0.4% in the December quarter. Income growth was 1.2%, being more significant than housing debt at 1%, which has decreased the housing debt-to-income ratio at 139.2 to 139 over the December quarter. But how significant is the mortgage risk? Well, the government-backed first home loan deposit scheme, guaranteeing home loans for eligible first home buyers with a deposit of as little as 5% of the property value, seems to have encouraged recent purchases. However, home buyers borrowing over 95% of their property values, many major Australian banks may face the rising mortgage risk, as indicated by a report from S&P Global. However, as questions concerning the need for interventions rose, the prudential regulator has indicated that it is not ready to intercede, with no evidence indicating deterioration of lending standards. At the same time, the housing prices leapt significantly in the past couple of months. The ending of JobKeeper last month further mounted pressure on the mortgage borrowers and could force banks to review the default risk. APRA has meanwhile stated that while the expiry of repayment deferrals and changes in government stimulus could deteriorate mortgage asset quality, however, it continued to say that economic recovery and low interest rates may partially offset the impacts. I'm Dave Mitchell reporting for Kalkine TV. We hope you enjoyed this report, and please stay watching.